Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Nadia. We have with us Kunal Shah, Head of Commodities Research, joining in. Welcome to the show, Kunal, and a very good evening. My first question coming to you is with regards to where crude oil is concerned. Today's session, overall, if you go to see as well, you are seeing that marginal uptick that has continued. Number one, we are talking of tighter supplies. Apart from that, a lot of other data which seems to be positive from here on, which could be impacting crude oil prices. Do you think that the sentiment is still positive as investors are expecting a string of improved data, and that's something which is providing support right now, maybe short term?
Yes, I think there is a full risk on sentiment going on right now in the world. So, on one hand, we are seeing the number of COVID cases are surging in US, are surging in Brazil, are surging in India, and on other hand, like I explained throughout last week. So basically, what is happening is so much money is coming in the risky assets that eventually everything is going up together. So I think the bull run in commodities as an asset class is started and it's going to continue. This party is not going to get over. So the bias is buy at dips for majority of the commodity except gold and silver. So the theme is we have to buy and sell, not go short and make money right now. This is a buy at dips market for commodities.
Right. So overall, if you have to look at crude again, we spoke about the COVID-19 cases. Now, with this, if you talk about where, US inventories are concerned, that data is pretty much positive. Again, the optimism of the V-shaped economic recovery, that's something which is getting support as well from the positive economic data that we are seeing, and the falling inventories in the US. With that, you have the US jobs data that has boosted the sentiment. So, what should the strategy be from here on, at least for today's session?
Crude looks positive. On 15th of April, on 15th of July, there is a OPEC meeting which is going to be conducted. So if you see what they are going to do after the production, whether the production cut will continue or not, okay, that is the call is they are going to take. So I'm not taking a call on that, but right now it seems that the markets are going to move up even for crude oil. So we've seen 2900 last week acted as a strong support. So from here 30 to 30 good levels to go along. 3100 3120 other levels you book profit. Again it comes down to 30 30 30 40 you buy. So buy it dips and keep booking profits at 2 3% upside. So I'm bullish on crude. 31 30 other targets what I'm expecting in a day or two.
Right. Another thing, Kunal, that I was reading about was really interesting is with regards to Fridays was a long, I mean, this weekend was a long weekend in the US as well. So a lot of analysts are looking at data which says that, if the mobility data suggests that there is muted activity, that's something which is going to be problematic, especially with regards to where gasoline inventories go, because last week they were rising. So, do you think there is a possibility that if the weekend mobility data that comes out suggests muted activity, then there is a possibility that this week you could probably get a chance to buy oil cheaper?
Yes, so if the inventories are bearish, if the data is very bearish in US crude oil stocks, which comes on Wednesday, so that time you can see profit taking or correction. But eventually, last week also the similar thing happened. It went down and again it moved up. So right now the power of liquidity is working in all assets. The inflation is coming, and when the inflation is coming, then oil also should not go down much. So I think the trend is looking for the time being, it looks up. The moment we realize that the scenario is coming that the OPEC supply is coming back in the market, at that time we can see a sizable correction. Till then, I think it's a buy at this market.
Right. And another question, lastly, Kunal, with regards to crude is with regards to the OPEC meet that you mentioned. As we know, it's scheduled for the 15th of July. Now, the way OPEC has been cutting, production in terms of targets, that's been interesting. Now, everyone's not sure whether August the production cuts will continue or not. But if you think that if we do not move into backwardation, do you think OPEC then will be probably inclined to extend a similar quantum of production cut?
See, OPEC may not continue with the same amount of production cuts. So right now we are working with 9.7 million barrels of production cut, which is going to get over by July. So what I am expecting is, considering the a lot of economies have opened out, in a lot of economies the number of COVID cases have come down. There is a talk that we may not see another lockdown going forward in US also, even though the cases are rising. A lot of people are saying that there may not be another lockdown. So in such kind of scenario, what is going to happen is that they will reduce that 9.7 million production cut from 9.7 to say perhaps 6 million barrels or 7 million barrels or 5 million barrels. So they can, still continue the production cuts, but they may not continue with the 9.7 production cuts because they are losing a lot on the volume.
Right. And with this, if you have to move towards gold as well, what's the sense that you're picking up right now?
Gold, like I said, $1,800 looks difficult for the short term. Long term, very bullish. But in near term, $1,800 looks difficult to take up. So why I'm expecting that in short term, it should not go up. India's demand is, India is importing nothing compared to what we have been importing. So 10% and 15% of the import what we are doing right now. So one hand only ETF buying is continuing, and on other hand, India, China retail jewelry demand is absolutely muted. So how long gold prices can just go up on the basis of ETF buying in a near term? So my view is that it's a sell on rise for the short term. 48,100, 150. I would short gold with a strict stop loss of 48,450 and expect gold to again dip to the levels of 47,700 to 650. And those are the levels I would again initiate a buy position. So I think it's a beautiful market for the swing traders. So when it moves up, you sell it, the levels which I mentioned. When you see gold coming back to 47, 500, 600, those are the levels you can buy with 200, 250 rupees stop loss. So I think for the time being, $1,800 is going to be a strict resistance for gold, and it may not breach it immediately.
Right, and do you see a similar trend coming in for silver as well? Because silver was trying to play a catch-up rally. There was a lot of buying that was happening on that front. Do you think we would continue to see some amount of profit booking on silver as well as we would see in gold?
Yeah, silver, I think is purely, acting in line with what is happening with the gold, the metals and gold. But metals are looking strong, so silver may not crash that badly. So I would say whenever gold goes down around 48,800, silver is a good buy. Stop loss should be placed at 48,500, and 49,550 to 600 should be the level one should book the profit. But when gold goes down, silver will see profit taking. So that's why I'm recommending, when it goes down, you buy. So I'm not expecting gold to immediately run up. The global VIX are going down. The bond yields have stabilized. Economic data today also from UK, whatever data we saw was positive. The manufacturing data across the world is showing some bit of recovery. So gold in near term may halt, and then it may resume its long-term bullish trend. But near term, gold and silver will not immediately shoot up.
Right. And what would you prefer in terms of base metals? Because I know you've been bullish overall as a trend with regards to base metals. Where would you place your bets?
In line with what we explained on Friday, what happened, copper went down and suddenly today it is up 360, 463. So the downside in metal prices is going to be absolutely capped. There is no major downside, and I think the trend is on the upside. With the same reasons I've explained, the liquidity is working right now for the risky assets. Ample of liquidity is chasing few commodities, and hence the commodity prices are going to go up. So forget about China growth story, global growth revival. On one hand, the global scenario becomes grim with every day going by right now, and on the other hand, the global markets are rallying because of liquidity. So I will not see very long term, but in a very short term, it sounds to me as a strong buy at dips market. Copper looks good. 460 levels, you can go long. Expect copper to again retest 367, 368. Same way, nickel, we discussed nickel at length the other day. Even nickel went up 990, good levels to go long, 1005, 1010, that kind of levels you can see for nickel. 979 should be the stop loss for nickel. And I think this two metal looks good to go long.
Right. And for now, there's a query coming in with regards to your view on the rupee dollar pair.
Yeah, so rupee dollar pair, Anup, it is given some bounce back, but I don't think so. It is going to continue. The trend for rupee is definitely on the downside. I'm not expecting, so downside is I'm expecting further appreciation in USD INR pair. I'm of the view that the rupee July contract 74.85, 74.90, good levels to go short. 75, 10, 15 should be the stop loss, and again 74.60 on the downside we can see in rupee in a day or two. So I would recommend to sell the rallies.
Okay, so down the rally with regards to where the rupee dollar pair goes, I think that's the only query we have right now. But Kunal, anything else that you would want to suggest as a strategy, say from the agri commodity side, or even if you have to look at something as agridex as an index? We've not really spoken about it since quite some time.
Yeah, so agridex, there is a locust attack going on in Rajasthan and MP that you must have read the news, and that is, sentimentally very positive for agricultural commodity. I really hope and pray that doesn't happen, or the crop doesn't get washed away by the locust, but that will definitely put some upward pressure on the prices of agricultural commodity, because this is the time where most of the crops are being sown. So at this time, any botheration or the locust attacking the crops, I think that's not good. So government has said that they are going to send some choppers, military choppers, and do they are going to spray some this locust killer liquid in the fields, but I don't know what's going to happen. But I think 1035 good levels to go long in agridex, and 1055 is the levels you can expect, targets.
Right. And Anup is asking you for your view with regards to natural gas as well.
Yeah, my view was bearish in natural gas, but last week the data which came was slightly supportive for gas prices. I've still not changed my view for gas. It sounds a very glutted market, but right now with all the commodities rallying, it is getting some traction. I'm not still confident to go long. And for gas, I would say 134, 35. I will again go short. So our buy call target, if intraday we achieve, when we achieve that, I would still, stick with the sell strategy. 140 should be the stop loss.
Right. So that's coming in with regards to where natural gas goes. I think majority of the queries that have come in have been answered. So thank you for now. Thank you so much for joining in as well, and thank you all the participants for stopping by. We will connect back with Kunal on Wednesday from here on now. So get ready with all your queries as well as questions. Thank you so much.